What I love about real estate is I'm getting the appraisal. So I have one person getting their eyes on it. Now, granted, an appraiser's valuation is just one person's guess at a given time. Our company's designed to build that team for you. We'll sit down and have a face to face meeting and we'll say, what are your goals? We want to know you. We don't just want to sell you a property, we want to sell you the right property.
Hey everybody, welcome back to Break Free from Wall Street. I am super excited for today's episode. If you've ever wondered how to put your money to work in real estate without quitting your job, without managing tenants, I think today's episode is really going to be tailored for you. I'm joined here by Adam Schroeder today. He's the co-founder of Premier Turnkey, has been helping investors build passive income in real estate portfolios since I think around 2017, if not earlier. Him and his company, they use data-driven approaches to find the right markets, the right properties, and really the right strategy for each investor's individual goals. Adam, super excited to have you on today. Welcome to the show.
Thanks. I'm looking forward to it. Really enjoyed getting to know you and meet you. So I'm ready to help educate anybody who's interested in real estate.
Absolutely. Yeah, met Adam in Austin a couple weeks ago and scheduled it for April Fool's. So I don't know if he really fully expected us to turn up, but had some great lunch out there. It's beautiful out in Austin. Yeah, super good to connect with you. I think I want to start off just by, breaking the ground on real estate, in general as an alternative asset. A lot of our listeners are seasoned investors. They own a bunch of properties, but I think a lot of the people who tune in are also, just starting out or maybe are on the fence, just curious but a little hesitant to break into real estate. When we're talking about real estate, I think it's often the gateway into alternative and just investing in general. In your experience, what is it about real estate that specifically makes it such a powerful wealth building tool compared to, conventional stocks, bonds, mutual funds?
Yeah, so I think a big part about it is the control you can have on it. I know, homes are slightly illiquid, but you can sell them and do whatever you want with them anytime. Like you can pull out cash from them, and still keep the asset, which if you're in the stock market, if you want, you have to sell them unless you're, worth billions of dollars and can, borrow money against it like, Elon Musk can. But I don't think
Yep.
everybody listening here is at that
Small
level yet.
percentage. That's
Yeah.
a small percentage of the population,
Yeah.
I would guess.
Yeah, I mean, you can sell it anytime, you can do whatever you want, but it's really, the numbers are there. And it's like you were saying earlier, it's a data driven thing. And so you can look at it and it makes sense to people. I mean, you can vet out the rent, you can vet out the pricing, kind of your mortgage terms. And what other investment is there out there? Like if you can't I couldn't go and buy $100 stock for $20 and just say, hey,
Mm.
oh, yeah, just front me the rest. Right? Like you can't do that with stocks or, any of that stuff. Like you can't go buy 100 grand in Bitcoin for 20 grand, but you can buy $100,000 home for $20,000. Now, I wouldn't recommend buying $100,000 home, but it's out there. It is available if you wanted to. And so I think when people look at it and see, the asset is familiar to them because, they definitely live in a house, but they might own their own home. And so they understand the asset class itself. And when they run the numbers, they see kind of what can actually happen with their portfolio and take it from there. I mean, a lot of people start in single family.
Yeah, for sure. And like you said, it's something tangible, that people, if they haven't already, gone through the process at some point in their life with their primary residence multiple times, it's something also that, the leverage is such a powerful way to even get into it in the first place. I love that. So you've been building, as we mentioned, your own multi-market portfolio since around 2017. What would you say have been the biggest lessons from doing this yourself that you would now pass on to, investors? Like if a friend came up to you, what were some of the first lessons you would give to them?
Well, the first lesson is I'm not doing this myself. I mean, the big thing is you have to build a really strong team. And when I say team, I mean, it's not just you and a friend who invests in real estate, although that is important to have a mentor, to have somebody who you can bounce ideas off of. But I'm talking, you need to have a good lender. And when say lender, I don't just mean like some random mortgage broker. You need somebody who invests in real estate, who understands real estate, who lends in all different aspects. I have a funny story about lenders that maybe I'll tell in just a minute, but you need a management contact. You need, because you can try to self-manage from afar. I've done it myself. It didn't go well. It's just way more difficult than you would think. Especially, and if you're investing like you do in the, retirement accounts, you can't manage it yourself. So you have to build a good team there.
Exactly.
You have to have a good, insurance person who will break it down for you, because regular primary insurance and investment property insurance, they are slightly different. And so you want to make sure you're getting someone who's giving you good advice on that front. And then once you build that team, then you can just bounce ideas off of each other. I will go into that thing. So there are investment style loans like DSCR loans, and there's conventional loans. And I was looking at buying a property, and the builder said, "Oh, use our lender and we'll give you these incentives." So I called up the lender and I said, "Hey, I need to do a DSCR loan on this property, which is basically way less paperwork and you can get it anywhere." And he said, "What's a DSCR loan?" And I said, "Well, I think we're done talking now. I need to
Okay.
go talk to my lender who knows what they're doing." And so you need to make sure that you're dealing with people who understand the investment real estate world, preferably who are real estate investors themselves, and just somebody who's going to hold you accountable. So what I learned early on was, besides just needing a team, I started off buying really cheap properties and just kind of accumulating those. And then I realized there's two good ways to build your investment portfolio. Number one is the law of large numbers. You just go in, you buy a bunch of cheap homes and build up your portfolio. You hear a lot of these kind of on the real estate dream stories of, oh, I'd put 100 doors in my portfolio in a year. Well, I guarantee you they weren't good doors. You put 100 properties in there and you just hoped that enough of them cash flowed and you didn't have enough evictions for you to do well in your portfolio. I'm not saying it doesn't work, but you can't just have 8 bad properties, or properties in bad
Hmm.
areas. But the other option, the way that I realized was the way that I wanted to go and that I recommend to people, is you buy fewer assets in better areas. Because when you buy fewer assets in those better areas, or, I'd love you to buy a ton of assets in those areas, but they're more expensive, you start dealing with people who are making more money. You start dealing with places with a lot more home ownership rate and less crime usually. And when you look at all of those, when you have people making $100,000, if they have a medical emergency, it doesn't kill their ability to pay their rent like they would if they're making $30 or $40,000. They can afford a rent increase every single year, whereas your other ones can't sometimes. And so it just your appreciation can happen, because if you're in an area with $40,000 median income, if you can't get a 50%, growth in pricing, because they wouldn't be able to afford it. And so the higher quality assets I've found over time have just performed better, even if it looks not as great on paper. Whenever you break it down after maintenance and after, evictions and all of that, you end up with as good, if not a better return, with the better quality asset with fewer headaches.
And I think those are a lot of the small nuances and variables that a lot of beginners may not consider, right? When they do hear, the talking heads on social media with, these strategies of just buy as much as you can at the lowest cost and start to build your portfolio that way. Like you mentioned, when you really get into the data or the information that we have, the facts, there's definitely better options. I think that's super insightful. As far as real estate goes right now, what markets are you most excited about? What, as far as what the data tells us, a
Yeah.
market is worth paying attention to?
Yeah, so it's not going to surprise anybody who's kind of paid attention to the real estate world. But if you look at the country, people are flowing into the South, Southeast, and Midwest. That's where the population is going. And that's really where we look. We look to see where are people moving, where are the jobs moving, where's the wage growth actually happening. And so we have a lot of stuff in Texas that's actually tenanted. We've got some stuff in Wichita, Kansas that's tenanted, new construction duplexes. We love the surrounding Birmingham area. I will say I wouldn't buy in Birmingham proper, but if you look at the suburbs are booming and they're nice areas. So we're in there. But so I would say, Texas, Alabama, some in Georgia. Florida used to be great because a lot of people were going there, but then there was a bit of an oversupply that happened that hurt the rents a little bit for now. I think long term, it's going to be a good place to be. If you bought day one right now, you'd be hurting, but it's still a good place to keep your eye on and see when it's going to make sense to jump back in there. But that South, Southeast, and Midwest areas are really where we're seeing the growth. And also, I mean, it's where we're seeing the good returns.
For sure. speaking about data driven results and your method. I really want to start to get into Premier Turnkey. Tell us about, what's the mission behind it? How did it get started? Who's your ideal investor? I'm just going to throw all the questions at
Yeah.
you at once, but tell us about Premier Turnkey.
Yeah, so our job is to build the team that I was talking about earlier. We find the builders, both regional, national, and local. We find the lenders. We find the property management company in every market. We find where you can get your insurance that'll give you good rates. We find, we tell you where you can find good inspectors. And now you don't have to use all these people, but it's as plug and play as you want it to be. Because whenever you're investing from afar, you need to be able to trust it. And what I love about it is even though I'm not going there, I mean, I've bought, rented, and sold properties that I've never seen. But what I love about real estate is I'm getting the appraisal. So I have one person getting their eyes on it. Now, granted, an appraiser's valuation is just one person's guess at a given time, but they're seeing it and they're showing, hey, there's value. I'm getting my inspector's eyes on it and they look and make sure it's good. I also usually have them do a walkthrough video for me so that I can kind of see the property. And then I have the property management company, taking pictures and putting it up there so I know it's there. And so I've got a lot of touch points on the property, even if they're not me. So our company's designed to build that team for you, and then we run the numbers for you. Now, some people they want to be more conservative or more more lenient on their numbers, but we walk through the whole thing with you. And so we'll sit down and have a face-to-face meeting and we'll say, what are your goals? We want to know you. We don't just want to sell you a property. We want to sell you the right property. And we want to walk you through the process of buying the right property because anybody can buy a property, but you really want to make sure that you're buying the right property for you. We want you to diversify in various markets throughout the country. I think right now I'm in 4 markets myself because I want to be diversified geographically so that whenever the next downturn comes, whether you think we're headed that way, whether we are in that place or whether it's going to happen, we know it doesn't hit everywhere the same. And so if you're in different areas, you're able to, withstand whatever happens because your portfolio in the other markets is going to support your portfolio in the market that gets hit if you're in that market. And now a lot of
Mhm.
our markets don't get hit. They're, a little more recession resistant. But so we try to help you do that. And so we know if you're going to buy 1 a year, you're going to buy 2 a year, 3 a year, whatever it is, we help you kind of formulate an action plan around that. And then we hold you accountable. If you tell me I'm going to buy a property in 6 months, well, then 3 months from now, 4 months from now, I'm going to be contacting you and saying, hey, preferably it's with us. But even if it's not with us, what are you doing right now? It's time to get pre approved. It's time to start taking that step. And so we were founded just on that principle. I mean, my co founder and I looked around and saw kind of what was being done for and with investors. And we thought, we can do better than this. We thought that, we can not only can we do better, but we can hand stuff off to investors more. I mean, one of the beautiful things about what we do is we've been able to get into the wholesale department of a lot of builders, the national ones, definitely the regional ones and the local ones. We've kind of created a wholesale division with them where we've said, what will this appraise for and what do you need for it? And then with the gap between that, we can hand off a lot of stuff to clients. So we can buy their rate down. We can send them cash back at closing. With some of them, we can even reduce the price of the home. So you're coming in with equity. We can get in there and get the ones that are rented that they want to get off the books. I mean, we're able to exert more control just because we have an actual network of people. And it's not
Mm.
just Adam coming to them and saying, I'd like to buy a house from you. They'd say, that's nice. That's cute. And we're not going to give you the incentives. And people will see, I will say what's important for people to realize is if you go on a builder's website, you might see, oh, we'll buy your rate down to 399 and we'll give you $10,000 of all of these things. That's only for owner occupied. If you come in there as a personal investor, none of none of those things are going to apply to you. They might give you a couple
Mm.
$1,000s, but they're not giving that away to investors. You can't just go there and say, you're giving 20 grand of incentives. I want that. It's not going to happen. You can try it, but it's not going to happen.
Mm.
So, our job is to bring the volume that it can happen for the investors. So that's kind of who we are in helping people with it. I
Yeah,
don't remember if there's another
that's
part I didn't touch on.
no, I think you covered it pretty well. I'm just that's super fascinating about the builders. I didn't know it was why. Do you know why that is? That they are more, picky when it comes to investor buyers.
Yeah, a lot of it is they're trying to keep the home ownership rate high in those areas because that helps, historically, higher home ownership helps appreciation. They people think, oh, well, if there's a bunch of renters, all the yards are going to be overgrown and this, that, and the other, even though if you're in the right areas, that doesn't happen. But
Hmm.
they really want to support the owner occupied more than the investor in their mind. But also, they don't have to. I mean, if if there's enough owner occupieds looking to buy, they don't have to necessarily do it, and they don't understand that type. A lot of it is also they're giving you money for a rate, but it's usually their lender, and so they're making
Right.
money on the lending transaction, and so it doesn't hurt them to give away, a 3.99 rate because they're getting the money for that anyway.
Right.
That's but if you're an investor, you can't use them, so they they don't want to give away that money if they're not gonna give you the loan.
Interesting. So I kind of want to walk through what the experience actually looks by step. So someone comes to you curious about real estate investing. What happens from the first conversation to closing day on a property?
Yeah. So step 1, like I mentioned, we do a face-to-face to get to know each other. Obviously, I'll tell you about us, but I wanna know you. I wanna know what you're already investing in. I wanna know what you're looking to invest, where you're thinking about investing, what you see in 10 years as having. In 10 years, do you wanna have a small portfolio, big portfolio? Are you investing this for your kids' wealth? Are you investing this for your wealth? What are you doing? And then I wanna know what timeline you're looking at. So are you looking to buy just before the end of the year? Are you looking to buy in 3 months? When are you looking to buy? Because that's all gonna impact your timeline. If you're looking to buy at the end of the year, we're recording this, in the April timeframe. If you're looking to buy by the end of the year, I'm not gonna send you to a lender now, right? Like, there's different things we're gonna do. We're gonna go back and forth. If this is now and you're gonna buy in 8 months, we're gonna have a different relationship right now than we are if you're gonna buy in, May or June or something like that. So if you're ready to go now, what I would do is I'd introduce you to our primary lender, or a lender who can help you in your situation. Like, our primary lender can help you if you're investing through your self-directed accounts, your retirement accounts. So, but we have other options for you if they can't. So get you with them, and just start the pre-approval process because that's the most annoying part of investing in real estate is getting pre-approved for a loan and uploading all the documents and making sure you have everything, which is why I love the DSCR process because it's like 6 pieces of paper and you're done.
Mm,
If you're doing a conventional loan, it's a ton of paperwork you have to find. We'll get you pre-approved so we know what you can actually buy. There's not a ton of point in looking at specific properties until you know you can get financed for it. Like, you might want a $400,000 home, but you're approved for $200,000. Well, do you have an extra 200 grand in your bank account they don't know about to cover the gap? Probably not. And so we want to know what your buying power is. And then once we know your buying power and your goals, we can find the right market, the right properties for you. And then we'll connect you and we'll get on a face to face call before you even go under contract and walk through the final pro forma that you're creating to make sure you're comfortable with those returns. So we'll say, okay, now we know you're going to get this rate. All right, let's input that rate. Okay, we know you can do this. We know you can do that. Here's your final returns. Are you good with that? And you say yes, we get you the contract, we start going through the process, and we check in with you, we help you through whatever you need. I mean, we're checking in and saying, hey, how'd the appraisal go? How'd the inspection go? How did this go? How did that go? And then we get you through to closing. And we don't just ditch you at closing. Obviously, we're not going to
mhm.
manage the property. You're going to hand it off to a property manager, but we're here. If something happens in the with the property, like something breaks and you need help getting it, because it's going to happen. You can. I tell people, you can have a 5% failure rate. Like, 5% of your dishwashers can go out. The 5% whose dishwasher goes out, they don't care about the other 95.
Nope.
They care about the fact it's their
It's
dishwasher.
100%
Yeah,
theirs.
it's
Yeah.
100% theirs. So, we'll help if something like that comes up and make sure that things get made right. And so, we're just helping throughout the process. We'll check in and then we hold you accountable for the future too. So if you tell me I want to buy one a year, well, then we're going to start, I'm going to check in with you in, 3, 6, 9 months and see, hey, are you still staying on the pace, or, has your pace slowed down? Has it gotten faster? And if you want to buy another property, with us or not with us, we'd love to know about it so we can say, hey, Nick, you said you wanted to buy these kind of properties and you're talking about buying this kind of property. Like, what has something changed? that made it make
Mm,
sense. Are you chasing a shiny object? Because there are a lot of
right.
shiny objects out there in real estate. What are you changing the strategy you said you had? Just making sure there's a good reason for it and you're not just going out and throwing your money at anything and everything that's out there.
Yeah, I love that. And that kind of brings me to the next point is with you being a turnkey solution. I know from Safeguard and Solera National Bank being a turnkey solution for self-directed retirement, a lot of a lot of people and I think a lot of the times that turnkey term often gets misunderstood where people don't really understand the full value that that's bringing. So when you're talking about with Premier Turnkey, what do you feel like fully managed and hands off, those type of terms actually mean in practice for one of your investors?
Yeah, well, let's be 100% transparent here. No investment is actually passive, but whenever you have a good management team in place that you can trust, you're spending way less time. I mean, I think on average, I spend maybe 5 to 10 minutes a month on my portfolio because it's literally just I open up the statement. They paid rent. This, oh, this maintenance thing came up. All right, was it their fault or the property's fault? And get that sorted out with that's just a simple email that I'll send off if there is anything in there even. And then, pretty much at that point in time, I'm done. Whenever the rent renewal comes up, the property management handles that. So I just have to say, I'll just have a quick call with them or a quick email exchange where they'll say, oh, they were paying 1,500. We think the market will support 1,600. Do you want to raise it $100, 75, 50, 25, or leave it as is? And that's one thing I think a lot of people chase. That's not necessarily the right way to go. The biggest expense you can have on your property is vacancy. And so if you've got a great tenant in place, you don't have to raise their rent up to market every time. I know it sounds like you're leaving cash on the table, but if you could do $100 a month increase, but you do a 25 or a 50, a lot of times that's like it's still a 3% raise or something like that, which will explode your returns whenever you're financing. Your ROI goes up significantly whenever you raise your rent 25 or 2 to 4%, somewhere in there. But keeping that tenant in place can save you a lot more money on the long haul. And I always tell people, if you're going to raise your rent $25 and your tenant moves because of that, to save $300, they probably weren't the right tenant in the first place. But some people
Mm,
will move if it's, $1,200, $1,500 in a year, because they'll just get annoyed with you and they'll say, hey, this guy's
yeah.
jacking up my rent. I don't like the way he does business, so I'm out.
Yeah, I think that's really insightful too, where you are maybe chasing those, on paper, the returns and those increases, but it could eventually lead to a much bigger problem.
Now, I will say I do recommend getting your property manager to go and do like a yearly inspection where they just walk through, take photos of stuff, and make sure your tenant's not, messing up the property. Because if they are messing up the property, you want to get them out of there as soon as possible
Right.
because you don't want it to get worse. And I've bought some of the cheap properties before, and I haven't done those inspections, and it cost me a lot of money whenever those people left the properties. I would highly
You definitely
recommend
want
doing
to.
that yearly inspection. 200 that 100 to $300 you're gonna spend can save you thousands of dollars.
Yeah, and for those investors who may like have a property that they don't reside in the state that it's even in. I think there's a lot of options as well for, virtual inspections that you can do. So keeping in touch with what your asset looks like and what condition it's in, I think is easier nowadays than it ever has been.
Yeah, definitely.
But yeah, super important. What would you say sets Premier Turnkey apart from just searching on Zillow or working with a traditional real estate agent? Because I know it does, but just for our viewers, how would you explain that to them?
Yeah, well, the big thing, like I mentioned before, is just the power of community and the ability of us to get into those wholesale divisions that you can't otherwise. We literally have someone under contract right now who's buying a property $50,000 under market value because of the relationship we have with the builder. So they're getting into a property that was built a year ago and they're buying it. It already has a tenant in place and it's $50,000 under the market value. You're not going to find that on Zillow. Like they're not going to list it, especially with these tenanted properties. Tenanted properties aren't going to be anywhere. They're completely off market. We have off market properties. If you came to me and said, Adam, what off market properties do you have? I literally have a list of over 100 properties that you could invest in today that you couldn't find anywhere you're looking on the market. The great part about us over a realtor or a real estate agent is a real estate agent's not going to go outside of usually their own market, definitely not their state, because they're not going to make money if you do that. And they're not going to know the other states. And they're also very few of them, believe it or not, very few real estate agents are actually real estate investors. They're just there to sell properties and move on. They don't actually buy properties to hold and, invest in. And if they do, they don't go outside of their home market. But very few of them are actually real estate investors. If you decide to do it, ask them and say, hey, how many investment properties do you have? And I'm betting the answer is zero, or they're an accidental landlord who kept their primary when they moved out. So
Right.
the big thing with us is just being able to, we're not tied to an area. If we're in an area, like, if we're in Florida and suddenly the numbers don't work and the area is experiencing, lowering rents or stagnant or lowering values, we just get out of there. We just, don't sell in there anymore and we move to the areas where it does make sense. If we find, oh, the area increased their property taxes and now it's hurting the investor, don't buy there anymore. Don't sell there anymore. And so we're a lot more nimble than we could be. And we're also tracking. We're making sure the areas that we're in are growing. If it's not growing, then if it stopped, if it's stagnated, we need to see, why did it stagnate? Is it likely to pick up in the future? And then we're able to move on or stay in place, whatever makes the most sense. And so it's really just the power of community and the leverage that gives us you know, to give them the best deal possible. Because I would say 90% of our deals right now, we've been able to negotiate we're giving cash to the buyer during the process. And you can take it as, through closing, you can take it after closing. We can put it in your property management account if you want. Some of them, like I said, we can reduce your price. So it's kind of I call it the choose your own adventure of real estate investing.
Mhm.
I don't know if that's before your time, but
Not before mine, but maybe for the people at home, go look that up. Go look that up on Google. That's awesome. Yeah, and I love that. It's really about not only getting into real estate, but having the right team to back you as you're starting off on this new venture, to help you see the blind spots that you may not be aware of, to help you through all the nuances, through all of the because it's a lot. It's definitely a lot if you're seasoned. There still might be things in your blind spot, and if you're new, there's definitely the whole thing's in your blind spot. So having that community, having that support, I think is incredibly valuable.
yeah. And I will say to everybody out there, you can call me a permabull when it comes to real estate, because I say you can always find a reason not to buy and you can always find
Mhm.
a reason to buy. Like, there are definitely markets out there right now that I would not buy in. But scratch those markets. There's a big country out there. I don't know if y'all know that, but the country's pretty big. And so there are markets, even in a downturn for real estate, if you think the real estate market is in a downturn. All of the US is not in a downturn. And so there's always places you can find deals that make sense for you. And even if the deal's not the greatest right now, if you look out over the long term, even if you just have a 2% appreciation, 3%
Mhm.
appreciation, and 2% rent growth, 3% rent growth, if you extrapolate that over 10 years and you have your mortgage pay down, your returns are phenomenal. Even just doing amortization, it's something like 11% a year on average by the time, 10 years from now or something like that.
Yeah, and like you mentioned, there's always a reason not to buy. I think if somebody's sitting on the fence, they're almost looking like they're curious about real estate, but they're maybe a little tentative to get into it. I think they are sometimes looking for those reasons not to invest, instead of looking on the other side of the fence and saying, you know what, this is not a good market that I'm in right now, but there's other opportunities out there. Like you said, it's a big wide world. It's a big wide country, lots of green grass out there. But for those people, let's say I came to you, as a friend, confided in you, and I was like, look, Adam, I'm really looking and really curious and excited to start to get into real estate, but I'm nervous. How can you help? Like, how would you help somebody work through that?
Yeah. I think it all boils down to, if you're not going to do this, what are you going to do? Because, not investing is a choice as well, but then it's sitting in your bank account making 0.5%. If it's
Right.
sitting there, if you have a high yield account, maybe it's making 3, maybe 4%. But not investing is an investment itself. So if you're not going to invest in this, what are you going to invest in? And how is that going to play out over time? And like I said, can you leverage what you're doing? Because suddenly, if you have $100,000, you can be worth $500,000. So if you're not doing this, what are you doing? And is that going to put you in a better position long term? Because I mean, real estate, if you look at it over time, it doesn't fail you. You know, even if your cash flow is flat for the rest of your life, and you break even on cash flow, if you look at the long-term growth in the areas, if you're in the right area, the long-term growth at like a 2% appreciation. I think whenever we did a episode on our podcast with our lender, if you have like a 2% appreciation, you end up with like a 20% ROI just from amortization and appreciation.
Incredible.
Yeah, it's pretty
Adam,
insane.
that is actually crazy. This has been amazing for somebody who's listening right now. Just as your final word of wisdom, as your final anecdote to leave with us here today. For somebody listening right now, wants to break free from Wall Street, wants to get into real estate, what's the very first step that you tell them to take?
I mean, really, the first step is to start building the team. But most important, if you're looking to buy, is talk with the lender and just see what you can actually do. And like I said before, make sure that lender knows what they're talking about, but just
Right?
talk with a lender because, if you get the right lender, they are real estate investors too. So they can talk to you about the long term benefits of it. They can talk to you about different loan structures you can take and make sure that you're getting pushed in the right way, so I would say just start talking to people. I mean, there's what do they say? The paralysis of analysis. That's all well and good, but even if you don't end up investing in real estate, it's important to figure out what you could do and then compare it to what else you could do and just see if it makes sense for you. Because some people, if your risk tolerance is zero, then maybe real estate isn't for you. But if your risk tolerance is even the slightest bit, it could be a great option.
For sure. I love that. So, Adam, people who are looking to take that first step, people who are looking to build that community, build that, network of professionals who can help them take that step, where can people find Premier Turnkey? How can they connect with you directly? Give us all of give us all.
Yeah. So our website is Premier Turnkey REI, like realestateinvestor.com. That's Premier Turnkey REI.com. If you want to email us, if you want to email me, my email is just Adam at Premier Turnkey REI.com. That's the easiest way to get a hold of us.
Beautiful. Love it. If you're looking to get into real estate and you need some people in your corner who can help you start off on the right foot and take the right path, Adam, I think, and his company, Turnkey, are a great option to be able to do that. Thanks again for coming on, Adam, sharing your insights and chatting with us today. We really appreciate you coming on.
Absolutely. I appreciate you giving me the time.
Absolutely. I'll have to come out to Austin again sometime soon. Maybe we can do some curling.
Absolutely.
All right. Appreciate you, Adam. We'll see you, everybody. Thanks for tuning in.